Chinese electric car companies will bankrupt Tesla. Hello everyone, welcome back to our channel, Tech Luxe Zone. Tesla Inc. enjoyed a breakout in 2020 in China on the back of record sales and the rollout of locally produced electric vehicles. But the company faces a stiffer challenge in the country and especially from China in 2021. In this video, we will talk about the competition of Tesla in China. Have a look. If you like our video, don't forget to like and share it with your friends and family. Also, don't forget to subscribe to the channel. Tesla launched its first model, the Roadster, back when there were virtually no electric cars on the market. Now, as the electric vehicle space is bursting more than a decade later, one manufacturing expert thinks Elon Musk's automaker still has no true rivals. None. There are no competitors to Tesla. But when they do come, they'll be Chinese. Sandy Murillo said during a Q&A session on his YouTube channel when asked which companies pose the biggest threat to Tesla. Murillo runs an engineering firm and is well known for his cost analysis teardowns of cars. Tesla is far and away the dominant force in the EV industry currently, and its roughly $40,000 Model 3 sedan was the best-selling electric car in the world in 2020. But legacy automakers have their sights set on the startup's crown amid tightening emissions regulations worldwide and growing excitement from investors around EVs. The People's Republic of China has a population of nearly 1.4 billion people. It's no wonder it has the largest global market share of all automobiles. Furthermore, government regulations promoting new energy vehicles, NEVs, as well as subsidiaries helped China maintain nearly 50% of EV sales worldwide in 2020. Like many industries, 2020 was a roller coaster of drama and delays due to the global pandemic. From February to March alone, lockdown measures stifled manufacturing facilities and supply chains in China. At the same time, consumer demand had diminished. This sudden decline of EV sales threatened the Chinese government's target of NEVs, accounting for 20% of all auto sales by 2025. In the second half of 2020, however, the EV market made significant gains after lockdowns were relaxed. According to the International Energy Agency, monthly sales of EVs surpassed between July and December 2019 in all large markets. In China alone, electric car sales were 12% higher year-on-year. Looking ahead to this coming year, China will continue to utilize its NEV subsidy program to incentivize consumers to purchase vehicles from companies like the ones mentioned below. China's full phase-out of subsidiaries has now been postponed from 2020 to 2022, although they are still slashing percentages. The next 2 years will be crucial in gaining ground on Tesla. Speaking of gaining ground, let's start with the automaker being donned, the Chinese Tesla. NIO is currently the biggest competition of Tesla. NIO is a publicly traded automaker founded in 2014 and based in Shanghai. The company actually debuted its first EV, the EP9 two-seat sport car, the day its brand was established. NIO quickly established itself as a leading brand for electronic SUVs, including the ES8, ES6, and latest EC6. The Chinese automaker now looks to expand its reach in the EV market with the recent debut of its first luxury sedan, the ET7. This new EV seems like it will try to compete with Tesla's Model S. Much like Tesla, NIO has its hand in other extensions of the EV market, including the NIO Life apparel brand, NIO Service Centers, and NIO Power, which handles the company's network of battery swap stations. Speaking of battery swaps, this is one form of tech that separates NIO from Tesla as a competitor in China. Battery swapping allows EV owners to easily replace the vehicle's battery once it goes dead or requires an upgrade. This has become the core of NIO's business model, hence the division of NIO Power. On the contrary, Tesla chose to abandon battery swap technologies several years ago. It instead chose to develop longer-lasting batteries for its EVs. Nevertheless, NIO has used battery swapping to its cost advantage. China's subsidies generally only apply to EVs priced under RMB 300,000, $46,600. However, there is a vital exception granted to vehicles built with battery swapping tech. This allows the NIO to price its vehicles as a premium category, while still incentivizing potential customers with cuts from government subsidies. That being said, the government's plans to slash future subsidies could soon jeopardize this price advantage. It could still leave many of NIO's models priced above Tesla. Li Auto uses a different approach. Moving north on the map of China is Li Auto. This Beijing-based automaker, founded in 2015, also offers a manufacturing facility in Shansu, near Shanghai, and NIO HQ. After a NASDAQ IPO last summer that raised $1.1 billion, Li Auto is now publicly traded. While Li Auto is only 1 year younger than its Chinese competitor, NIO, it has some serious catching up to do. To date, Li Auto only offers one vehicle, a luxury crossover SUV called the Li Shang 1. What separates this automaker from the others on this list is the fact that Li Auto manufactures plug-in hybrid electric vehicles, PHEVs. This may already seem like a passing technology compared to fully electric vehicles, especially as China has tremendous goals and deadlines for lowering carbon emissions. However, Li Auto is trying to target a specific corner of the Chinese automobile market and act as the bridge between consumers abandoning archaic ICE vehicles and diving headfirst into fully electric vehicles. Is Li Auto a competitor to Tesla in China? Perhaps not yet, but there are some interesting similarities. Founder and CEO Li Shang has been compared to Tesla CEO Elon Musk for his unique vision of the future of electric vehicles. Oh, and he's also a billionaire. It's unclear what Li Auto has planned next to try and dethrone Tesla, but it probably involves a second vehicle for sale. Xpeng Motors is also a competition. Xpeng Motors is another automaker based in China, hoping to serve as competitor to Tesla. Founded in 2014, it is the southernmost Chinese automaker on this list, with its headquarters in Guangzhou. Xpeng went public last summer on the New York Stock Exchange, NYSE, raising $1.5 billion. Take that, Li Auto. Since 2018, Xpeng has launched 2 electric vehicles. First was the G3 SUV, followed by the P7 sedan in 2019. Xpeng CEO has hinted at a third model, a sedan, but there have been no further details. The P7 is a clear attempt to compete with Tesla's Model 3 sedan, while the G3 is more similar to the Model Y, although it debuted 2 years prior. While Xpeng currently operates in China, it has recently begun deliveries to Norway as well. It did operate a subsidiary in the US at one point too. The company briefly held a permit with the California DMV to operate self-driving tests. This technology has been growing exponentially among major automotive players like NIO and Tesla. Xpeng Motors has not revealed any plans to enter the United States market yet, but its enormous rounds of funding on the NYSE should be encouraging to the automaker. Kandi Technologies stay unique. Of the Tesla competitors in China listed above, Kandi Technologies remains one of the longest running. With that said, the company remains a tiny but powerful entity in the EV auto market. Since inception, Kandi has manufactured the automobile designs of fellow Chinese companies like Geely. It has also supplied over 40,000 EVs to the cities around China in the world's largest car share program. Unlike many of the other competitors in China, Kandi is known for its compact and affordable EVs. The automaker currently offers 3 models in China: the K23 multi-purpose EV, the Maple 30X SUV, and the K27, which looks very much like an electric Mini Cooper. What's also unique about Kandi Technologies is that it specializes in other means of transportation like electric tricycles, ATVs, and even go-karts. What truly makes Kandi the most unique out of this list is that it is the only automaker to make the trek overseas to sell EVs in the United States. Kandi America debuted in 2019 and was soon approved to export EVs to the U.S. by the National Highway Traffic Safety Administration, NHTSA. Kandi America's website is currently taking pre-orders for the K23 and K27 4-door EVs. The two are listed at $20,000 and $10,000 respectively after the federal tax credit for EVs. Kandi promised to begin delivery stateside at the end of 2020, but there hasn't been an update since then. The automaker is currently facing a class action lawsuit, alleging it inflated some of its revenue numbers. Regardless, Kandi is the first Chinese automaker blazing a trail for other companies in China to expand and challenge Tesla. If you like our video, don't forget to like and share it with your friends and family. Also, don't forget to subscribe to the channel.